Well, what we've seen in the last 6 months since the partnership agreement was signed with the Commonwealth and all of the states is a huge amount of activity in preparing for asset recycling. So Queensland and New South Wales in particular have announced very extensive asset recycling programs, and the other states have also announced either single assets or broader programs. And the Commonwealth has also now have its own program as well. So there's a huge amount of information that's come into the market around the pipeline for those assets. The most immediate ones really are the Queensland and New South Wales packages, and the key driver behind that is of course the elections that are occurring throughout the course of next year. And this will be a key election signpost for the current governments. So things are tracking along quite quickly, and they need to, because one of the conditions of the Commonwealth Agreement was that construction on the replacement projects, or the projects that will be funded through the recycling, has to occur by June 2019, which doesn't leave a whole amount of time to actually get the recycling done and get the construction done. So moving along very quickly and likely to continue that pace for the next little while. Well, in terms of asset recycling, there's a bit of a mixed bag. I mean, most of the assets are very well-established assets that have a well-established cash flow. Those are the easiest to take to market. They're also the most sensible in terms of age and the ability for the private sector to take on operation and maintenance of a known quantity. So largely the economic assets are in that category. In terms of new projects, there have been a lot of PPPs come to market over the last 12 months, and they are both across economic and social spaces. We've seen some rail projects, we've seen some prison, we've seen other social infrastructure projects as well. Certainly we're expecting to see a steady pipeline of new projects come to market. A lot of them will be delivered as PPPs, and most of them will have the availability charging type arrangements that have been a feature of PPPs for the last few years. Well, I think the really key thing in the asset sale space is that there are going to be a lot of assets that come to market for sale or lease at the one time. And certainly what we've been hearing is that there's a real question as to the depth and capacity of the Australian debt and equity markets to handle those transactions all at once. So certainly there will be huge opportunity for anybody in that space, both in Australia and internationally. So much so that I think really these transactions can't happen without a fairly high degree of international involvement. So effectively anyone who has an equity or debt interest or wants to move into that space, there's a huge amount of opportunity in the asset recycling space. Following that, there will be further opportunity with the pipeline of new projects that come to market as a result of the sales, but also that are within the pipeline at the moment. Most of those will be delivered as PPPs or involve some degree of private investment. So again, there's opportunities in that space for investors and debt providers who are interested in funding projects at the front end rather than taking on a brownfield asset. And the other element is there are a number of PPPs that are getting towards the point of flipping from construction into operations. And that's a natural time for the investor mix in those projects to change. So there's also opportunity in that space if investors who have been in those projects from day one now have an appetite to exit or reduce their share or similar. So a lot of opportunities across the whole spectrum.